Let's bring in an important guest, Jim Rogers, author of Street Smarts, Adventures on the Road and in the Markets, joins us on the show from Singapore. Jim, great to have you this morning. Just wanted to get a quick sense of all the geopolitical tensions, coming in from Ukraine and Gaza. Any repercussions you expect on equity as well as commodity markets? Any change in risk aversion?
Well, they've already had an effect on some markets, as you well know. Last week, the American stock market went down 2 or 3%, so somebody's paying attention. Unfortunately, we've had problems in Gaza for at least 40 years, and I'm afraid we might have at least for another 40 years the way things are going. These eruptions break out, and they always have an effect, and they will continue to. Is this the beginning of the Third World War? I doubt it. Certainly not in Palestine, Gaza, Israel. We have all been making many mistakes there for a long time, and I'm afraid we will continue to. Someday one of them may get out of control, but fortunately, too much of the world is focusing on this now for it to get out of control. Ukraine is more dangerous, if you ask me, because unfortunately nobody seems to be getting it right. Not that they are in Gaza, but certainly not in Ukraine. The Russians seem to be fouling up. The Americans certainly seem to be fouling up. Is this the beginning of the Third World War? I doubt this is going to erupt much further too, but it is more dangerous because there are too many people with too many hard heads.
Okay, wider risk aversion also throws investment opportunities. Any regions or economies that are looking good to you at this juncture?
Well, if war is going to break out, obviously the way you play war is gold, oil, commodities. War is not good for anything, except it's always been good for real assets, because people desperately need real assets during time of war, whether they're in the war or just protecting themselves. So other than that, I don't see that any of this is good for anybody or anything.
What do you make of the statements coming from the FOMC and recent data from the U.S.? By when do you expect to see a rise in interest rates?
Well, it's pretty clear that, in my view, what's going to happen is that as the U.S. pulls back, and they say they will continue to pull back, eventually interest rates will go higher, or stock markets will go down, or both. And unfortunately, when that happens, these people in Washington are not, they're bureaucrats, they're academics. They're going to get scared and panic. When people call them up and say the pain is too great, they're going to relent and start printing money again and say, don't worry, we'll take care of you. The markets will breathe a sigh of relief. They'll rally, go up for a while, and unfortunately that may then lead to the last leg of this bull market. Because rather than staying the course, which central banks have rarely done in the past few decades, they will give in, print, say everything is okay, but they will not be. They will just get worse.
Jim, there is a lot of excitement among investors towards India post the change of guard. Do you share the same optimism? Will Modi turn the Indian economy around?
Well, I would like to. He has said a lot of good things in the past. He's done some good things in the past. Of course, he's done some bad things too. Unfortunately, his new budget was not very exciting. He has the problem, of course, that he does not control the upper house and cannot for another year until the elections take place. But even then, one has to wonder why he's not doing things now. He won a smashing victory. Why isn't he taking sound, good changes for India yet?
Sure. One commodity which impacts substantially, from an India point of view is oil. We have seen some weakness there, some correction, of course. What levels do you expect in 6 to 12 months?
Oh, I don't know. You should watch Indian TV. I don't have a clue. I'm a very bad market timer, very bad short-term trader. I do know that the surprise is going to be over the next few years, how high the price of oil stays and how high it goes. I mean, known reserves of oil worldwide are in decline, and that's going to cause problems down the road.
Jim, the prices of crude are not only declining, but the prices of natural gas have slipped quite rapidly. What's your sense on the whole sector? If world has discovered shale gas, then oil and natural gas, they both should come down in a synchronized manner. Currently, gas is down and oil is firm.
Natural gas prices are very low. They're down 60, 78% from their all-time high. There's been a glut in the U.S. anyway, where the price has been set on the futures exchanges. That glut is probably not going to last much longer. So I would suspect that natural gas is probably a good place for people to start looking for investments.
Also, gold prices are stuck in a range. There's pressure from a stronger dollar and equities, while also support coming in from geopolitical concerns. Where do you see gold prices headed?
Well, I'm not a buyer of gold. I'm certainly not a seller of gold. I own gold. I would suspect there will be another chance to buy gold sometime in the next year or two. I'm doing nothing at the moment.
The base metals have seen a big run-up on back of strong manufacturing numbers from US, Europe and now China. Do you see the run-up is likely to continue in some of these industrial metals?
Yes, I'd rather buy base metals than precious metals, mainly because base metals were beaten down more. And we do know that expansion, capital spending in the base metals industry has been cut back dramatically because people are worried. That has not happened in precious metals. And there's still a lot of precious metals in inventory worldwide. That's not true of base metals.